Good day all. Ira Epstein of Linn Associates with your agriculture update, and this is a wrap-up for Monday, the 3rd of February, 2020, and we're just after 1:35 in the afternoon, that is Central Time. So it is still the coronavirus. It is still wondering how deep supply cuts are going to be, or actually the demand for supply is going to be out of China. That's probably the better way to say it. It's one of the reasons coffee keeps going down. Now, if you think about it, in the coffee market, if you're in China, Starbucks closed half or more of their stores. What about the other local merchants? What about people that aren't going out in all these cities? In one of the new cities over the weekend, they're letting one of your family members out every 2 days to buy bare essentials. That's not demand for those goods. So that's what we're watching in part going on. And while the stock market's getting a nice bounce today, is it more than a bounce or something more? We don't know. What we probably do know is the first time that somewhere in the world, and it doesn't have to be the United States because our FDA has its own guidelines to take a certain time to get medicines done, but somewhere in the world, if they can find a cure for this and get it fast-tracked, it could be very interesting. Energy prices continue to fall. They are saying that as much as 20% of the oil demand out of China under pressure. And while we look at the grain markets and we see what they're doing, we're already hearing that China is preparing to tell the United States or ask the United States that, hey, given all this that's going on, they're not going to be able to meet that commitment they just signed to. And it is covered if there's an event like this in it. And I read that agreement and the wording is there. So we'll see what happens. But at this point in time, we've come back in the soybean market, as you know, under the 870 level. That's quite a bit of a drop. The market, while it's up today and setting the week up a little bit, it's just a one-day bounce. This is where you look to see what's really going on. And here is a market that got under the 870 level, and maybe the market doesn't want to go further because it'll be off my chart and I'll have to change the scale. I've seen that. I've seen that happen on me before, but don't know how deep of a break is, and that's the problem, because you're dealing with a pandemic, and when you get a pandemic, you just don't know what happens in supply and demand chains. So we still have the downtrend. You can see that. The market, we had a bearish crossover over here. And when you think back to it, we were talking, well, how much is it going to do? I said, and I know I said that on Thursday, well, it's already hit its goal. Then it went Friday a bit lower, and now we're getting a bounce. Okay, this was the last break low in December. We're well through that. Is there a lot of downside potential left? Might be the better question at this side, and I think that's something that I can't answer just yet. When we take a look at Bollinger Bands, each time you've hit the Bollinger Band, even if you're moving lower, you're staying to the right-hand side. So we had that first thrust down on this terrible news. The market has since moved to the right-hand side of the band, but moving to the right-hand side is just, it's not getting excessive in terms of the algorithm, nothing else in price. And you have an embedded reading. So there's nothing friendly on this. When it bottoms, trying to pick it. Don't do that. More traders get hurt trying to pick tops and bottoms than you can imagine. In the meal market, you can see how we finally broke down under these Bollinger Bands. This was Friday. We were under the number. Today, the market finished at 289.80, again under. So we've got now 2 days in a row under the band. On this day, we finished at 291.50. That was under the band. So that's 3 days in a row we had under it. And on this day, I'd like to see which that one is. That's over it. So you had 3 days in a row. Tuesday reversal, possibility, but a lot of bearishness, embedded reading, nothing friendly on the chart. Soy oil, embedded reading, hit the lower band, bounced again, but it's been doing that. If you take a look, just like the other parts of the bean complex, it collapsed right there, then it got back up to the band, fought at the 100-day average, and right here it was fighting to keep an embedded reading, which it did. Then the market on Thursday came back down. Friday, I do the weekly chart, so you didn't get to see this action. And today, you're just getting a little bit of a bounce away from it. Okay. What scares me is if that 100-day average gets under, or rather the 18 in red gets under the 100. That could be another bearish element for this market. In the corn market, you're trying to reach down for the lower Bollinger Band. Now, you'd hit it here, bounce back into the resistance, didn't quite make it down here. Now the question is, are you going to make it again? You're oversold in a downtrend. Nothing on the chart pattern can turn this market up at this point in time. So you can negate the pattern maybe, but you can't turn the trend up. Not as a chartist right here. In the wheat market, lower highs, lower lows, right into the support today of the lower band. Now let's get back here. This was where we were on Thursday. Hadn't quite hit this band. In fact, you haven't hit it in all this time frame. You've got to go back to last November. Today, the market came down, hit the band, and as I'd expect, first challenge of it is often a zone of support. You bounced and closed 5 cents off it to the upside. That is not a trend change. It's a bounce off that downside target you haven't hit in quite a while. In the sugar, got up today to 1501. Would not be surprised that you hit that upper Bollinger Band. I wish I could tell you why sugar is up and everything around it is collapsing. I can't. But it's got the higher lows, higher highs, and it is overbought. Coffee, I call it the endless bear market. And I've given you the reasons, and if you think about it, losing a whole country like China, where these massive cities and people that are coffee drinkers aren't getting coffee, they're not buying their teas. I mean, everything coming down in that realm because so many stores and restaurants are closed, social gathering places. I mean, the whole country isn't shut down, but just think of these cities of 10 million, 20 million people where they're quarantined, and it gets pretty rough. Cocoa market, well, it'll be interesting to see if it does get down to the 18-day average, what it wants to do. If it closes under it, it starts throwing out bearish signals. If it can support it, you still have the pattern of a lower high, lower low. So the swing line's down, but the bias is up and momentum's turning down. In other words, nothing's in agreement right here. In the cotton market, until these factories get going in China, the last thing they need to do is import these type of goods. That's a dilemma. And that's putting the export market of cotton on notice, and the market is drifting down on price. If it continues here, because it's 2 days under the lower Bollinger Band, the 6,600 levels where your 100-day average, that should be something of a support zone. In the beef market, you just can't lift this market. So I hear all this talk, we're exporting all this meat and all. Okay, but why is price going down that much? Same in the feeder cattle market. And if you look at the hog market, while it was up today, all it's trying to do, in my opinion, is get back over the lower Bollinger Band. You have an embedded reading now. This market's still bearish, and you just keep cutting through everything. This market has probably taken more people to the shed over the idea, well, China's going to buy, and these markets just keep relentless to the downside. You know, if you like these indicators that you see me talking about, we have our guide to technical indicators. It's a PDF that we made. Good friends at Modern Trader Futures Magazine, they worked with us over the years to put this together. And it's quite a guideline. Because if you're trying to get a refresher, something simple, it's number one, it's got all the examples about it. You know, one of the things some traders like is market sentiment. I'm not the biggest fan of that. Tried to use it for many years. It didn't work for me, but you have to understand it because sometimes that moves the market. What about Elliott? What about price time? That's the Arun relationship that I talk about so often. Elliott wave principle, options primer, it's all here. You can read about it. It's simple, easy reading with graphs to make you understand or help you understand. How do you get it? Call my staff. They'll get it right out to you in 1 second. Believe me. Take your email and it'll be right out to you. Otherwise, go to our website, sign up for our free offers, and we'll get it to you. I'm Ira Epstein. You have a great day, and I'll talk to you tomorrow.